Hello, this is your daily dose of financial market trends. Microsoft just posted a 15% single-day gain. AMD and Amazon are surging in tandem, and three major central banks are at crossroads that could reshape markets for the rest of the year. Heading into today's session, yesterday's close had the S&P 500 at 7,437, up 1.66%. The Nasdaq finished Thursday at 25,122, jumping 2.78%, while the Dow closed at 52,208, up 1.19%. The VIX ticked down slightly to 17, and the 10-year Treasury yield rose to 4.66%. Let's start with Microsoft, which is commanding serious attention right now with its 15% move. The stock is showing up across multiple corners of the market simultaneously. Social platforms are buzzing, volume came in nearly triple the normal pace, and the price action itself is turning heads. With the Federal Reserve's September meeting looming and cloud computing demand continuing to accelerate, Microsoft is becoming a focal point for investors trying to gauge where big tech heads in the second half of the year. This kind of broad-based interest usually means something beyond just a technical bounce. AMD is right there alongside Microsoft, posting a 13% gain and generating real attention across the investing landscape. The company has an earnings report coming August 4th, just days away, which is clearly driving positioning ahead of the print. But there's more to it than just the usual pre-earnings jockeying. The combination of geopolitical chip dynamics, the September Fed decision on the horizon, and AMD's role in the AI infrastructure build-out are all converging. Investors are clearly trying to get ahead of what management says about demand trends and competitive positioning in a rapidly evolving semiconductor landscape. Amazon rounds out the big three movers today, up nearly 4% on unusually heavy volume that ran more than double the typical pace. The e-commerce and cloud giant is catching attention from both retail and institutional corners of the market, and that dual interest suggests something more structural than just day trader momentum. With AWS continuing to power forward and the Fed potentially pivoting toward easier policy in the months ahead, Amazon sits at the intersection of several positive narratives: cloud growth, consumer resilience, and the possibility of lower rates helping high-growth names. NVIDIA deserves a mention here too, up 2.65% and staying firmly in the conversation, despite not matching the explosive moves we're seeing elsewhere. The company remains the bellwether for AI infrastructure spending, and any movement in chip stocks naturally brings NVIDIA into focus. The ongoing geopolitical semiconductor story and Fed policy uncertainty keep this one on everyone's radar. Three major central bank situations are shaping market thinking right now. First, the Eurozone inflation picture just got complicated. July inflation accelerated to 2.9%, reigniting the debate over whether the ECB needs to reverse course and hike again. The bull case, sitting at 45% probability, says this spike is transitory, just base effects and energy volatility, allowing the ECB to stay put. If that plays out, European equities would rally on relief, peripheral bond spreads would tighten, and the euro would weaken a bit, helping exporters. The bear case at 35% says if inflation keeps climbing through September, driven by wages and services, the ECB gets forced back into tightening mode. That would hammer European stocks as recession risks mount, strengthen the euro, and send government bond yields surging. Closer to home, the Federal Reserve's September meeting is shaping up as the critical pivot point for the rest of 2026. The bull scenario at 40% says if inflation keeps softening and the labor market weakens enough, the Fed signals rate cuts starting in Q4. That would ignite risk assets, particularly growth and tech stocks, tighten credit spreads dramatically, and weaken the dollar. The bear case at 30% says if core inflation stays sticky above 3% or geopolitical tensions disrupt supply chains, the Fed holds restrictive policy through year-end. Expect a significant equity correction in that scenario, with rate cut hopes pushed into 2027 and the dollar strengthening. Finally, the Bank of Japan is navigating its own normalization after decades of ultra-loose policy. The BOJ is maintaining current rates, but giving hawkish forward guidance about further moves ahead. The bull case at 50% envisions a carefully telegraphed, gradual tightening path through 2027 that lets markets adjust smoothly. Japanese equities would benefit from improved bank profits, and controlled yen appreciation wouldn't disrupt carry trades. The bear scenario at 20% is scarier. If the BOJ accelerates hikes and triggers rapid yen appreciation, global carry trades could unwind violently, forcing deleveraging across markets and spiking volatility in a repeat of past liquidity crises. The housing market is sending mixed signals. 30-year mortgage rates eased to 6.58%, down from a year ago, helping push existing home sales up nearly 3%. But inventory is building to 9.3 months of supply and home prices are barely growing. This looks like normalization after years of rapid appreciation, though the market remains subdued overall. AMD reports next Monday, August 4th, and given today's price action and the buzz building around the stock, that earnings call is going to be closely watched for guidance on AI chip demand and competitive positioning. 5 things worth watching from here. 1. Big tech is back in control of market narrative. When Microsoft, AMD, and Amazon all surge together on heavy volume, that's not random noise, it's institutional repositioning ahead of potential Fed easing. 2. The September Fed meeting is becoming the single most important event for the rest of the year. Your portfolio positioning should account for both the rate cut scenario and the higher for longer scenario because both remain very much in play. 3. Central bank policy divergence is creating real opportunity and real risk. The ECB, Fed, and Bank of Japan are all at different stages of their cycles, which means currency moves and international equity performance could surprise. 4. Semiconductors remain the market's geopolitical and technological battleground. AMD's upcoming earnings will give us a fresh read on whether AI infrastructure spending is accelerating or plateauing. And 5. Housing market normalization is underway but fragile. Rising inventory and slowing price growth suggest we're past the peak. But whether that's healthy rebalancing or something worse depends entirely on where rates go next. As always, this is educational content, not financial advice. Do your own research and consult with a professional before making investment decisions. That's your Morning Market Digest for Friday, July 31st. We'll be back Monday morning with everything you need to know. Trade smart out there.